Good morning, everybody. Sorry for the last couple videos with the volume. I'm probably pretty soft-spoken because I'm not trying to yell. I don't know my volume output on any of this yet. I'm pretty new to this side, but it seems to be accepted, and a lot of people are liking these videos, so I'm going to keep pushing them out there. I did turn up the input, so hopefully the volume is better on this video. But bear with me as I work towards getting better equipment to make these videos more of a better quality for you guys. Today what I'm going to kind of touch on is something, because we're going to see a lot of these patterns and trends develop as we are trading. And we've talked about the trend lines and the channels, the consolidation zones, these little breakout points and all these following the Fibonacci sequence of up and down, and in those patterns. Well, one of the things that markets, especially that trade, especially with bot activity increasing with these, as we get onto these bigger, better exchanges from more traders and such, you're going to see gaps in these price points on the timeline and such. So for fun, I kind of went through. I already plotted them all, and I might have missed one or two. So if you see one that I missed, I don't need to be too. I don't want to get too crazy with too many lines. But I went through and I did a little plotting of some gaps on the 15-minute chart, which isn't too crazy, but something to kind of look at, and we'll see on a bigger timeline how it overlays. I just finished plotting them, so I haven't even gone through and kind of double checked or even gone on any of the other timelines. So what I'm talking about when I'm talking about a gap, and this purple one I did all three colors the same just because of how they were back to back to back. So this 15-minute candle started up here at the top of this one and then closed down here. The next 15-minute candle opened up here. There was a gap right here in this price. You can see that this gap was obviously similar size to this bodied candle, but there was some big jumps in the price back and forth right here, because after this one opened at the bottom here, closed up here, this next one opened here, closed here, and the next one was down here. So this now creates a gap in the price history. A lot of times you'll see, large body candles probably covering this gap prior to, but, kind of one of the things about history is it repeats. So what we're going to see is this market is going to want to work its way back up to this gap. There's no timeline to predict it, but eventually we're going to see this gap be filled. Just like, this gap is obviously getting filled, but let's just kind of go back and look, and I'll show you where some of these are, and we'll see why they're getting, why they're magnets for the price, and you'll see the kind of pattern persist. So this one opened down here, closed up here, and then we had a gap all the way up here where it opened and closed up here. This is a gap. So we saw some chop in here, and we're probably going to see the price want to come back up to these two gaps. There's going to be a magnet to that zone. What we did with this one came down. This was a strong move. This is when the market really started getting kind of excited. But what it did is opened here, closed here, opened here, closed here. This is a gap, which we are in that price right now, kind of filling that, and now moving towards these ones. As we go back farther, we saw that on the way down, this one kind of created a little bit of a gap. So down, then this one opened here, closed here, next candle opened up here, closed up here. So this created a little gap in here. We did see the price come into it and filling it, but just because the gap was quote unquote filled doesn't mean that that's not a zone of interest that the price is going to want to come back to. Price came back to test that area. If you think of it as a thinking machine, realize that gap was filled and obviously moved up to the next one. That's not necessarily how they work, but these gaps create points of interest, just like the support and resistance zone. So as we kind of just scroll back, I only did all the way till November, but you have open close and open. Very small gap in this range. It's only a 1 cent change, but it was a jump. It wasn't the same price, so there's going to be a little bit of attention to that one. I wouldn't give that one too much mind to because the price was pretty much the same. But quick moving price is going to create these gaps. So that's why we see them eventually get filled. Going back all the way, this is these earlier ones. I started with the red color, as you can see it when you're drawing on these. And then we do the color wheel. Oh, thinking about it, red, and I just went this way as I did the charts. So as you can see, the colors changing, yellow, orange, red. These are towards the beginning of November. So this one is kind of an interesting point. We're way back in November. So this one, the two yellow ones are the gaps together. Stop clicking on that. Closed here, opened way down here, and then the candle, retraced back into the gap. And it overlapped with this one that was a little bit before, where we had a close down, and then we opened up here. So this point kind of overlapped twice. So for me, when I'm looking at that point, the multi-gap kind of stacked on top of each other. And then we even have this red one from back in the beginning of November. Kind of started the downtrend, kind of kicked us off, where we went big pop down, close here, opened there at that $5 level. So there's going to be a magnet and a draw, and then also as you're trading this, you're going to look at the $5 price level. It's probably a resistance point. Hopefully there's a catalyst or a big draw of new investors coming in to help push over that hurdle. We already saw the reaction to the $5 price on why it triggered so many sellers. So if we go back to it again, there's probably going to be some more sellers, especially some who think that they missed out on getting the profit from it. But it should not trigger the same downfall, because we are going to ultimately fill in all these support shelves of the price throughout. There's kind of your look back on the 1 hour at these zones. You can almost kind of fill them in, I guess, as one body, even though like this one is a fairly larger gap. I don't know why I keep wanting to go all the way. This one, and to zoom out a little bit to get to November. October is done. So we're stair-stepping up. We kind of filled that one. Now we're filling this one. Looking for the next price move up to this one. And these ones, there's probably going to be some pretty strong consolidation where the price might be stagnant here for a little bit. Just because, one, that's very close to that 379 liquidity shelf that was injected. There was a lot of price action in there in October. So I could see the price being pretty slow through this zone. But greener pastures are above, which we get into this $4 range. $4 is the whole dollar number. So there's going to be that psychological buildup. And we have a pretty good shelf of activity right in this range. So, as a trader or as an investor looking for the opportunity, there's going to be a lot of opportunity to add in here. And then this candle right here on the 1 hour draws my attention for an area that I'm going to look at as we get back up to it. Is this one is a very small body, big wick looking. Oh, there we go. Stop being like that. And then we also have very small body candle with long wicks on both sides of it. That means that those points are obviously going to be support and resistance. And it kind of confirms itself with this one right here. And then if we follow this across, it kind of lines up with this area right here. So there is going to be a definite support and resistance, and so we're just going to use that candle to show us points of interest. And we're going to make them white to stand out from our colors of our gaps that we had. So now, looking at this on the 1 hour time frame for the month of November, first time together here, November, we have these gaps that will be points of interest that need to be filled. So those will be consolidation zones and kind of like a magnet to move the price to. And then we had a very large wick body right in the middle of it, which kind of covers us over the 380 zone, which we know is a liquidity shelf, and then the 445 zone, which to me, based on the price, kind of if you look at the move up in incremental values from 380 to 445 to 525 530, that's kind of a consistent move. So this would be a very good zone for a lot of activity to be, for strength of market in the future kind of thing. Not necessarily like, hurry up, let's push it to 445. There's no rally cry or nothing, but I would love to see this get bigger. This similar type of action with the consolidation, but kind of flip it to where we go positive after. And build, kind of in that stair step kind of level. But this will really solidify this lower 4 and the upper 4 as a range of strength, because when we get back up into this $5 zone and we test this psychological level, there's going to be selling pressure undoubtedly. But there's also going to be a lot of investors who are new, who are coming in, and then the community also sees well beyond 5. There's plenty of people who see this project being 7, 10, and fully believe in the path of 16, the path of 80 that's being talked about. Those people are going to come in, and even if we do meet heavy selling in this 480 to $5 range, then when the pullback is only to 445 before it reverses and then goes through. And once we get through that wall, the resistance that it was becomes support. And so the stronger that the resistance was before, once we get over it, the stronger the support will be going forward. And then that's where we're going to see the move through 6 and 7 and 8 and 9 be much more like the moves through 1, 2, 3, 4 that we saw originally on the price going up to 5. Because the rally and the momentum will all be, bullish sentiment, all systems go moving forward. And then with the next big psychological level being 10, but we already went through this growing pain of not having enough people actively investing to support. The market strength is going to be way stronger hitting and attacking the $10 hurdle. So a lot of optimistic looks at this going into it, and just kind of some levels to be mindful of. If you're trading, these will be levels of interest that there'll be profit taking, and don't be discouraged. And then if you were if you're the investor type, these are all levels that you'll have time to buy. So the price will slow down a little bit here for a while. Next move up is going to be this 359 to 367 in that kind of range. I'd probably even include just 369 just because all the purple activity, 370. There's going to be good time to add to your position in that range. And then we're going to get into the white channel being 382 to 444. And I think we're going to spend a lot of time in there. I think volume will pick up in that range pretty sizably, both as a sentimental change to the bullish side, because if you look on the other exchanges, you can see that's our price comparison to Bitcoin and LTC. If you look at Pinex in the last hour, going back, hourly chart is each candle going back to November 10th. Since November 10th, this is how we stack up compared to the rest of them, all very comparable. Litecoin is our kind of clone, and idea is what we're built off of. Bitcoin as the OG kind of granddaddy of all the crypto, so one to kind of pay attention to. Kind of a fun one to be able to see. You just can hit compare and pick whichever coin you want to compare to, and it starts based on whatever you have over here as your start point, and that's what this black line represents, the price of what it was back then. And you can see you can move it and it changes with you. If you're okay, since November 14th, what are we? Oh, we're all down the same. That's kind of a fun tool on Pinex. By economy, we can look 1 hour. All the moving averages are very, very tight. This is good for that consolidation when all the moving averages are linked up. You can see typically big moves come afterwards. So we are kind of sizing up for that next move up, most likely, and into this blue zone in the 360 to 370 is our next move up. One thing that I like on Biconomy is you can look at the order depth, and you can kind of see how heavily we are in sell orders to buy orders in this range. These are all probably stacked orders that people just have. It looks at the order book shows 90% are sell orders, and we only have 9% of the orders are set to buy. And this is not a negative, and it's not necessarily them creating. I mean, I guess you could say they're creating walls, but it's people who are looking to trade and capture profit that don't want to miss out. If you were to go through the depth, I would imagine that there are just a ton of them in the $5 range. As you can see, all of them are in the $5 range, pretty much. This is where $5 starts. So you see all these orders are up in 5, basically meaning that there's probably some anticipation that TXC is going to inject liquidity and is going to buy up to 5, and they don't want to miss out, so they just got loads of orders stacked up in the 5. Off of the Zoom call last night, the liquidity is being injected a little bit differently now, or at least temporarily, but they're not just dumping huge block orders, which is fantastic. Very glad to hear that they're not doing that, because that creates the milking orders and creates unhealthy walls or unhealthy price levels. Instead of building the support throughout the whole zone, if we only have these large orders, at 380. I way messed that up. This mouse is a little sensitive today. If we only have our 380 price and then we move it all the way up to 530, there's no help here. And that's what happened. And so when the momentum blew through all that help, it even went below the former 380, which is probably what triggered a lot of fear in people, which created more selling because the momentum of buying stopped, because everybody was like, whoa, what's going on? Help us. Where's the lifeboat kind of thing? And, we finally caught our legs and caught our support. The mining is growing at a great rate, 50,000 plus and moving forward. Still see some solid growth in that. Investors are growing, and I think the biggest indicator that we're getting some really good investment growth in this is that we are now Bitmart consistently as our number one volume. That is a much, much better exchange. And then we also have MEXC getting very close to passing DEX trade. As you can see with the little indicator here and here, that means that they do not have reserve data. That's part of them being tier 3. They basically show a very shallow order depth, and their price is about all they share with CoinMarketCap. CoinMarketCap says, cool, thanks, you're tier 3, you're not nothing fancy. So when big crypto investors will come in and look for coins on CoinMarketCap to get they look for their market cap, they look for the volume, they look for their fully diluted value. This is the value of the coin based on today's price when it reaches max supply. For TXC, since we're not fully verified, our stats and data are not accurate because the holders is being reported only off of Uniswap, and that's off of WTXC, which isn't even the TXC. So then you go to, so you can't really take this for much worth, as it's not the true TXC. This self-reported circulating supply is not from CoinMarketCap because it's not verified. It is from TXC based on the mine tokens and all the cold storage wallets. And that's where we see our total supply that's circulating out right now. And then the volume, the dollars, based on the market cap, this market cap is this price with this number, creates this. Our volume is the dollars in a 24-hour period of trades. It is a tiny amount. Very, very small. You guys are killing me. I gotta get them to go outside. It's that time. But as you can see going through, we are growing on the better exchanges. Bitmart, MEXC, Bioeconomy, Pinex, with Bioeconomy and Pinex both being US friendly. XT, Bioeconomy, MEXC, and Bitmart being tier 2. This is strong growth and getting us on the path to have real crypto investors, not just only miners support. And the confirmation of the project is good for that. For people who initially got in and are mining and are used to using DexTrade, I mean, it's not bad to keep using DexTrade, but it looks like, from judging based back on the Zoom call last night, that the liquidity and movement is going to be more towards MEXC and Bitmart, and then the other exchanges are going to kind of catch up, probably Bioeconomy and Pinex, considering that they're US friendly. I'd like to see some liquidity being injected into those. I think XT was also on the short list that they're ready to move on, mostly probably because it's going to be very similar to Bitmart and MEXC. So if you're on DexTrade and you want to get on one of these bigger, better exchanges kind of thing, that's going to help the project with its growth. You don't have to sell out and then move your money over, because the selling pressure goes across exchanges. So if your price on DexTrade and you're placing all your sell orders and you're like, well, the price is different on these. Right now they're all pretty similar, but 342, 339. Every now and then you'll get one that's 358. There's arbitrage, a large price gap. The bots that are on these accounts through these exchanges will go out and ultimately balance those out. So it's not like you're going to lose out on money and say, well, DexTrade has a better price. It's very short-lived, and you might be able to catch those, and there's people who actively look for arbitrage and trade off of that specifically. But over a long term, you don't have to worry about that. But if you want to be more in line with where the liquidity is going to those exchanges directly and be part of the better reporting to give the justification for the project, I would suggest coming over to your wallet, not download, wallet, come over here to Spot, and it'll bring you into your wallet. And then we're going to say withdraw. I'm not logged in, so it doesn't have any of my information, so I can't give you that exact details, but I'm just going to show you the basics on how to do it. It's automatically going to default to Bitcoin, but you can come over here and change it. Say I want to do TXC. And then tell it how much TXC you want to withdraw. And then you're going to paste the wallet that you want to deposit it with. So when you can come over to any of these, and you go into your wallet, this is just my little baby one that I withdrew over, but we deposit. Oh, well, I think I'm actually meant to go to receive crypto. Everybody will be a little bit different. Yeah, deposits for money. I should have hit receive crypto, sorry. So you do your receive crypto. This is the little transfer that I did from the tiny amount that I had. And this is the tether address, but I come over here, click the one. Everybody's going to be a little bit different, but this is just on Pinex to just give you an idea because they all should be pretty similar. Give it your TXC tutorial. Make sure it says this is your TXC address. If you are transferring TXC, make sure your TXC address. If you're transferring USDT, make sure you're on your USDT address. As long as they match up, they will transfer. So we go back and do TXC, copy that, and then go over to DexTrade, insert that address to where it's going to withdraw it to, say all your coins, or whatever amount you want to do. If you want to leave some on DexTrade, that's totally up to you. I'm not telling you what to do with your money. Just a suggestion based on the growth of the project and kind of where the liquidity is going to be going is Bitmart, MEXC, XT, Biconomy, and Pinex. For getting people on board and getting new investors, I think we're really going to want to see Biconomy and Pinex grow, considering those are the most US friendly ones and the easiest ones to get directly onto, deposit money from a debit card or an ACH transfer and immediately just start buying. Pinex is another one that I think we could grow more. For somebody who's like, man, I don't want to look at this chart and go through all this and find my prices and my orders, and I don't know how to do all that. I don't want to watch all of Lonnie's videos and see what he's doing to know where I'm trying to sell. Go on Pinex and let one of their bots do it. Their bots are pretty successful. A lot of really good reviews. You could use one of the AI ones that's using the inputs and parameters from ChatGPT, and ChatGPT is pretty smart. Worth looking into and doing, and creating more volume. The more volume that we get on these bigger, better exchanges that's not DexTrade, the more likely that we're going to see people who have made their profit on the Bitcoins, Litecoins, Ethereums, and all those other ones, and then we move over. I want to see the market. And we move over, and we're going to be more like the big boys and trading with them. And then when we have this comparison, maybe we'll be green while they're red. Or, they'll be chasing us and trying to be like us. But just a couple little things I wanted to touch on. The gaps are fun to look for, and we're going to see these zones become active, especially as we get on the larger exchanges. Larger exchanges, one, they have built-in bots for the exchanges to go after the arbitrage. Also, you see bigger crypto investors are actively using these bots. They pay for bots specifically to do trades for them. One of the things that they do is they scan for new listings. They scan for volume activity. So when you see volume spike of 20 in the 24-hour window, volume spike of over 10%, their bots are supposed to go after and trade that, and that triggers people to buy them because they're like, oh, everybody's getting into it. I want to be in it too. That momentum is what builds or gets the eyes and attention of the bigger investors, and those bigger investors are going to come in and look at the project out of a market standpoint first and be like, wow, this thing has got some growth and got some legs. One, I can put money in here safely and confidently. And then what is this thing really about? And then they're gonna start Googling it and searching it, and they're gonna see all the billboards and all the success stories and all of the the community strength, and then they become new miners too. So not only do we get the miners becoming investors, but we could get investors becoming miners. There's two streets down this road. So again, more eyes, more better is all I'll keep saying. And hope you like this one. I did kind of bounce back and forth between two hot topics, and mostly because of what was spoke on the call. looks like Bitmart, MEXC, Biconomy, Pinex, XT are going to be where liquidity will be being added more consistently. And that is a great thing if the community follows that and builds those networks, because that's what's going to get the outside investors to come. So sorry for this one being a little bit longer than I thought, but I kind of got carried away. I will see you guys on the next one. I got to get these dogs outside before they freak out. See you guys.